blinded by the lights, revved up like a juice, like a runner in the night.
Are you perked up, haven't you?
I'm always perked up.
Not yesterday.
Especially when I've got me coffee. What do you mean not yesterday?
We're like a dying swan.
Shit. Well, at least I was a swan. Very graceful. Normally it's a goose farting in the fog with my singing. Say. Well, it's Saturday. Got my coffee. Got my sarcastic other half. So it must be coffee time with Scruff. We're going to have a chat about failure. And a warm welcome to one and all. Those of you not seen me before, my name is Langers. I am the Scruffy Trader. And on a Saturday, I like to grab a coffee and just ponder my thoughts. And I was reading a comment sort of in the 5%ers forum that I'm a member of. And it was about failure rates. How 90% of traders are deemed to fail. Now I think that's a subject that's worth discussing because it is probably what will make or break you as a trader. Because most people think it's strategy. It's not. It's so far removed from strategy. They're on, I was going to say they're on different pages. They're actually in different books.
Are you serious?
That's how far they are apart. See, your strategy is just tip of the iceberg.
It's a tiny piece of paper. Okay, that's all it is. Tiny piece of paper.
It's just kind of what gets you in and gives you a little bit of reasoning. But how you become successful a trader has more to do with your mindset than it does with your strategy. And I've kind of proved that many times. So what I'll do is I'll take you up in this study. I'm going to go through the whiteboard a little bit. And I think there are 5 failure points, or 5 main ones anyway. And the last one is probably going to, let's just say there's not many people talk about it. All right. And they are definitely controversial, the last 2 parts. The first 3 are easy. The last 2 rather, probably a lot of people are going to go, whoa, no. And I'm going to go from my experience and say, yes. So let's go up into the study and we'll figure this out.
Well, we're waiting.
Okay guys, so I'm going to continue this little chat about fail. And kind of to back it up, I'm going to pull out some statements. Why? Well, it's the end of the month and kind of a lot of the guys like to see where I'm up to with the prop firm that I trade. And also it just add weight to what I'm saying in the sense that I know what I'm talking about. What I'm going to show you is, I'll show you 2 statements actually rather than just one. And these accounts started in April and we're now in November. And they've gone from 13 grand to over 130,000. So trading is possible if you look at it as a business and sensibly. Now, one of the things with failure, before I flash these up and go on the whiteboard, is that the industry has a massive failure rate that is well publicized at around 90%. I think that maybe is on the high side. And why? Because it takes into account a lot of what are called punt traders. They've been down the pub and they've heard their mate talking about Bitcoin or Dogecoin or how the FTSE's doing or whatever, and just the latest fad. And they think to themselves, oh, I'm going to get a piece of that. So they open up a brokerage account, dump 500 quid in it. They've got no concept of what they're doing because they've had no education and they've put no thought into what's doing. and they just think it's a click of a button. And why? Because the mate told them it's easy, and they've watched the odd YouTube channel with somebody who doesn't show them the statements, doesn't trade in real time, and uses a trading view which is cherry picked.
No way!
And then turn around and say, give me £1,000, I'll make you rich. Yeah, of course they will. Then you lose. Why? Because it's bullshit. Very, very simple. And they never touch the brokerage again. And I think there's quite a lot of that. Now, if you put the work in and you look to educate yourself, and then you put, I don't know, maybe £5,000 into a brokerage, because it takes money to make money. You can build from a small account, but it's going to take time. And you fail because maybe it's just not for you. It's not what you like. Your mind can't get round it. You don't like the emotional roller coaster you go through, but you gave it a good go and then fail. I think that's what the figures should be based on, but they're not. It's all rolled together. So when you're looking at failure and things like that, and touch on education. Now, if you were to educate yourself, it's only part and parcel of what's doing. Experience is your best teacher, because you'll learn the pain threshold by doing it. You will learn the market movements by being in and around the markets. If you think you're just going to buy a course off the shelf and then suddenly be Warren Buffett tomorrow,
I don't know where you get your delusions, laser brain.
you're setting yourself up to fail. And this is the whole thing. It's one of those industries that does set yourself up for fail, because it's treated as quick money instead of putting your work in. Case in point, I've done this over 15 years and I'm still learning every day. You know, it's a job. There's always something new. But my core values have stayed the same for a very, very long time. And one of the things that I had to conquer was ego. And if you can conquer your ego and sort of the emotional side of it, you'll do well. Because every system works, believe it or not. You just need to be able to recognize the conditions. How do you recognize the conditions? Time. Because you've seen it before. And it's very simple. But then you have to put the time in to become a master at what you're doing, like an apprenticeship. Case in point, I'll give you an example before I show these statements. I say something at the end of pretty much every video, and I live by these words, and it's something that I've spoken to my children about constantly, and it is, do what you love and the money will follow. And I truly mean that. And I'll use my eldest son as an example. We're talking when at college, this is a long time ago, and his friends were all going to work in factories, and they were getting very well paid for working in a factory. And he's going, oh, I want to do in there. I said, well, but you don't like that. You like cars. Grease monkey. Don't know where you get it from, because I don't like cars. Well, I do like cars, but I'm not a speed freak. I prefer my luxury saloons or a nice big 4x4 than the sports cars that he whizzes around in. But he loves it. You know, and he likes fixing them and all that sort of thing. He's not going to do that in a factory. Yeah, but the money's good. Look at it this way. If you want to be a bin man, because you love being a bin man, then be a bin man. But be the best one. And if you're the best bin man, you get a promotion. Become bin man supervisor. And you get a pay rise. But then become the best bin man supervisor. And then you get a promotion. Become bin man manager. You get a pay rise. But be the best bin man manager. You get a promotion to area manager. You get a pay rise. So you're doing something you love, and the money is naturally following behind you. Simple process. So the moral of the story is, he decided not to go in the factory. He went to do his apprenticeship as a body shop. And that's what he is. Panel beater, mechanic, grease monkey. And when he started, didn't earn a lot of money. You know, couldn't afford to really get the bus and everything. So ferry him to his college and all that sort of thing, just so that his pennies stretch out. But he put the work in, he put the hours in, passed his exams, got his certificates, and now he's got a very good career for a very big company, repairing fleets of cars. But he earns 3 times what his friends are earning that are still in the factory. So sometimes when you're starting at the beginning, it's hard. And it's not a road you want to take because it's not quick money. But if you do stick at it and you go for it, the rewards are there to have. And trading is no different. You know, if you're looking for quick money, you're going to fail. If you're looking for it as a job, then you'll be fine. Now, that's my story with trading. You know, I wanted it to be my job. And here I am. And it pays me quite well. So let's see how it does pay me. And then we'll jump on the whiteboard and we'll have a little chat about the 5 major points of failure. So let's have a look at these statements. Or at least it will do when get the bloody computer to work. Right, there we go. All right. So this particular statement we're looking at is a 50,000 account. Now, if you want to try any of these platforms that you see, go in the description. This is the 5%ers live account. Beauty of this is you are live from day one. So when you're looking at prop firms, this is probably the best one on the market at the moment. Very low buy into it. And because I work with them quite closely, they gave me a discount code for you lot to try it. You'll find that in the comments and description below. You get 5% off. But as I said, started in April, we're now in November, 13 grand to over 130. And I know you're looking at it going, hold on a second, hey, that's 50 grand. Yeah, but I've got 2 of these. I trade a number of accounts for these, and I'm going to show you 2 of them. So 50 grand, decent equity curve. Now this is the bit I'm going to draw your attention to. I pump the work in, put the time in, and I trust what I'm doing. 1100 trades, 88% hit rate. That is not luck. You know, you cannot be that lucky that many times. You need to know what you're doing. But there's another part to it. The profit factor. Because you can have a 99% hit rate and still be a loser, because that 1% could wipe you out. You need to control it as well. Anything over 1 is deemed profitable and sustainable. This is at 1.7. So I'm happy with that. Because my philosophy is start with 0, end with 1. Doesn't matter what happens in the middle. Okay. So that's one account. And as you can see in the top corner, it is my name. Langers is a sort of a nickname from my second name. I've had it since I was 10-year-old, so I don't think it's going to go away anytime soon. And here's another account. Now this one's an 80,000 account. All right. So it's a bit of a game changer. And if you look at the P&Ls that you've just seen, both of them have a good payout for me this month. Now this one is 182 trades with a hit rate of 92% and a profit factor of 13.8. Now the difference between them is I look at them on different time frames. On this one I look at higher time frames. It's the 4-hour daily charts, and the other one is based on hourly charts. And it's just 2 different ways of trading. Okay, so there you are. So the proof's in the pudding. You know, if you're going to open your mouth, at least back it up. And that's what I do. That's why you see me trade real time. I never use rollback charts. So let me jump on the whiteboard and we'll have a little chat about the strange way Scruffy looks at life.
Good job.
Okay guys, so let us have a little look at these failure things that I'm talking about. And right, I'll try and make it as easy as I can. I think is the easiest way. So the first three are the normal failures. So let's just get a pen here. Get rid of all this crap here. Okay. So the first one is FOMO. Now, if you haven't come across FOMO, it is the fear of missing out. Basically, you're gambling. You see the market moving, you want to be involved, and you get it wrong. Why? Because you're buying at the top of the market or you're selling at the bottom because you haven't analysed it. So that's quite easy to fix. Just let the candle end and put some work in on your education. It's that simple. So that one's quite an easy fix. So is the second one, which is where you overtrade. In other words, again, you're coming over onto the gambling concept. I've got to be in, I've got to be in, I've got to make the money, I'm chasing the money. So as soon as you've finished one trade, you're looking for the next trade. Again, it's an easy fix. Trade once a day. I set the guys in the Scruffy Squad a challenge. Trade once a day for 30 days. I did it. They didn't. Because they always saw the next opportunity. And the whole idea of the process was not to trade. It was to train the mind into looking at what you're doing. Waiting for that one shot. The sniper approach rather than the shotgun approach. Because when you go into war and battle zone, the ones who have the big kill count are the snipers. Because they are methodical, well planned, and well executed in their task. Whereas the front line just go for it. What they get is what happens in front. There's no planning really to it. You know, they're just doing what they're told to do. Almost like a signal service. Cannon fodder. You might guess, I don't believe in signals. And then there's the gambling, which ties all three of them together. Because if you are gambling, 1, 2, and 3, they're all connected, you're going to lose. So that's the first thing. That was just a glossary of what they are. Now these next two are probably going to be controversial. Certainly what I'm about to say, and most definitely the next one. So I'll rub this off, right? Because we know there's 5 points. All right. So, what is the next one? Now, when you're looking at your gurus and all these others,
You ding-dong!
They've done studies, 60% of the time, it works every time.
they're going to tell you this is what makes you money. Your risk reward. They're going to say, right, you only need to win 4 times, but if you're on a 3 to 1, you're going to end up making money. Is that right? No, it's not. You've already set yourself up for a fall. And why is that? Well, if there's your baseline, and you're going 1 unit here to get 3 units there, you're assuming that you are correct at the point of entry. What's the chances of you catching the exact bottom of the market or the exact top of the market? It's quite difficult. the chances are you're going to get the middle bit. So the market has a good chance to go to there before it goes up there. If you are looking at risk reward, start there, 1 to 1, because then you are 50-50. You have as much chance of winning as you have of losing. Then you add on a few extra percentage points with your strategy. And that's what gives you your little bit of an edge. It's a bit like a casino. When a casino is working, they are working for a small edge. And that small edge over time gives you your profits. But there's another element to that which they don't talk about. Risk reward only works if you have fixed stops. However, fixed stops don't work. And why is that? Because the markets are dynamic. They are not fixed. So every time you're going into the market, your stop has to be where the stop has to be. In other words, you have to look at the structure points, you have to look at the levels, you have to look at the price action as it is and make a logical choice as to where to place that stop. Now, if you're just plucking something out of the air, it's just gambling. There's no thought in it at all. You need to plan out your trade. And that's where risk reward falls down. And it's why a lot of people fail, because they have this narrative in their head that it has to be 3 to 1 or 2 to 1 all the time. So what they're doing is, when the market is going for them and they think, yes, I've got the money, suddenly they lose because it runs out of steam, and it might run out of steam just past 1 to 1 reward, but you're holding on for the 2. Turns round, goes down, stops you out. Whereas if you'd staged your orders, you have to take profit at that 1 to 1 and move your remainder of the order up into break even, and then see if the rest of it would run, and you'd make money. But if you were trying wholeheartedly at 1 to 3, you will lose. And it's that simple. So that's something to think about, your risk reward. And like I say, it is a controversial way of looking at the markets, because I don't look at risk reward at all. And I learned that a long time ago. You know, you must be mindful of your risk, but you don't put your stall out on the risk. And what I mean by that is, that's how much this trade is going to cost me. If I am wrong, I am comfortable that I am wrong. But if I'm right, great. That's simple. So my stop and my profit targets are defined completely different. But this is the bit that most people are going to go, what? How the hell did you come to this? And it is quite simply, bright. And I know you're going to look at that and go, what? Bright? And a light bulb? What the hell is he on about? I often say failure comes from you. Not the system, not the market, but you. And you look at me sideways and go, no, if the system's crap, I'm going to lose. No, because every system works in the right conditions. The trick is to know what the conditions are. Every market works. So it doesn't matter if you're trading orange juice, Aussie dollar, gold, or coffee. It doesn't matter. Because a chart is a chart. And a chart will go up and a chart will go down. The difference between the chart is the rate of movement. How fast those charts work. Now, if you're day trading and you're on a very, very slow moving market like London sugar, what's the point of looking at a 5-minute chart? Not going to do anything. So you look at it at a daily chart at a weekly chart. Cable, on the other hand, moves pretty well. So you look at it on a 5-minute chart, and then you can see your opportunities. So a chart's just a chart. Right? So I'll come back to you. But what's bright got to do with this? Well, if you've got a brain in your head, and you think you're reasonably bright, it's actually working against you as opposed to somebody who's a bit thick. And I know you're going to look at me and go, excuse me, you calling me thick?
Who'd be stupid enough to do that?
Justify, stupid.
No, I'm actually calling you intelligent. But just because you're intelligent doesn't make you say you got common sense. Take my sister. My sister's very bright. You know, academically, she's the best of us all. Wouldn't trust her to cross the road on her own because she's got no common sense. You know, but does that mean anything? No, it just means she looks at the world in a different way. And that's what we're all about. Now, somebody that is clever will always be looking for the light bulb moment, the aha moment. Whereas somebody that's not too bothered will just follow a process. This is what I have to do, A, B, C, and I come out at D. Whereas somebody who's bright will always look for shortcuts, and they'll want to know how to go from A to D with missing out the middle bit. Why? Because they believe they're cleverer than that. And they don't understand that if something is so simple, why does it work? And then when it fails, there has to be an ulterior motive. So they start deconstructing it. And they deconstruct it in such a way they get blinded by the light. Hence the song at the beginning. Because think about it. If you look directly into a bright light, can you see something? No, you can't. You're blinded by the light. So being bright is a bad thing. So you almost need to dumb yourself down a little bit. Now, if you think of the charts as light and dark, and they are made up in such a way as it's going up, this section here is dark, and that section is the light. So the light will show you the way forward as you would in a torch. But us as traders, we are looking to find value in the dark. Now again, if there was a bright light shining straight at me from the darkness, I won't be able to see the treasures. But if I had a torch going the opposite direction, just a small torch, I will be able to see it. And that's what I mean by light and bright. Sometimes the people who fail are the most intelligent. And it's no detriment to them. It's just they're looking to break down everything so much, they're missing the point of what you're trying to achieve. It's just the way of the world. You know, keep it simple. In fact, I'll show you how simple trading can be and a thought process. Nice and easy. Let's get rid of this lot. Now, as I said earlier, on the point of entry, you're 50%. All right. So how can you look at this logically? Very simply. You have a level here and a level there. Your price moving forward from here is either going to hit that one or that one. So this point becomes your pivot. Just there. All right. So as long as it's staying above that point, you've got every opportunity to go there. As long as it's below that point, you've got every opportunity to go here. Now, if that's actually on a level, Well, that's how it works. So it's 3 levels. That's as simple a way of looking at the markets as it's going to get. The trick is knowing where those levels are. And I pay a lot of emphasis to those levels. And I'm more so than any strategy I use. And you talk to any of the guys in the squad, and I know they get bored with it, and I know they look at me sideways because I say it every time in the live stream. They just want the entry, they just want the exit. The most important part is the level, because that is the entry and the exit. Your strategy just adds a couple of layers to it. So deconstruct your brain and look for value in the dark is kind of what I'm driving at today. So in recap, fear of missing out, over trading, gambling, all 3 of those are literally just one subject. You will fail. So you need to learn to control that. Your risk reward can put you on the path to failure because you're setting yourself up for a fall. So again, you need to revisit and look at that. And then finally, put my teeth back in. Don't over-engineer the process. Get to know one indicator. You don't need several indicators. If you're using an oscillator, you only need one because they all do the same thing. They're bounded between 2 points. You know, if you're using moving averages, you only really need 2. And they'll give you a definition of a bias if that's what you're looking for. But then focus on your levels. And it's all very, very simple. And then just put it together in the basic of basic plans. And you'll find you'll knock a lot of your failure rate out. Now, I know what I say is controversial because everybody will gravitate and they'll pull me up on the risk reward. Well, I've just shown you my figures. I've been around a very long time. And I can only believe what I do. And what I do know from what I do is it works, I'm profitable, and I make a living from this. You know, don't have to be the richest person in the world to make a living, but I make a living. And for the 5%ers that you've just seen, I've turned that from 13 grand into a 6-figure account in a single year. In fact, it's less than a year because I started it in April. We're now in November. So it's gone from April to November from 13 grand to 6 figures. Just doing what I've told you. Very, very simple, guys. So if you're stuck, by all means contact me. I'm very amenable. Please share the video. I'd genuinely like to see it grow. And if you are looking for brokers, etc., you'll find it down in the links below. And if you genuinely want to see how I do things, check the Scruffy Squad out, because I'm very transparent and there's open conversations every single day. So there you go. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.